Hello dear traders, welcome to Insta TV. You're watching financial news with me, Anna Kasatkina. Asian traders are fretted about the looming trade war between the US and China. The US dollar is extending losses against its Japanese rival. Today, the dollar-yen pair slumped by over 1.5%. Later, the pair made an upward correction and surpassed the resistance level of 105 points. Nevertheless, analysts foresee a further decline of the US dollar against the Japanese yen to 100 points. Experts say investors will flock to safe haven assets on the back of a further escalation of the trade conflict between the US and China. Yesterday, US President Donald Trump signed the memorandum targeting China's economic aggression. In response, Beijing stated that it plans to impose retaliatory tariffs against 128 kinds of goods imported from the US, including agricultural products and processed aluminium. Experts are certain that other countries will be involved in the conflict in the near future. Apart from politics, macroeconomic data determines trading sentiment. Today, Japan released an inflation report for February. Japan's consumer price index grew 1.5% in annual terms, in line with expectations. The fresh figure has been the strongest since March 2017. Besides, the core consumer prices rose 1% in February from 0.9% earlier. The latest data indicates that consumer inflation is approaching the target level of 2%. It means that the domestic economy could be ready for monetary tightening in the medium term. Meanwhile, the likelihood of the trade war is not the only reason behind weakness of the US dollar. Political uncertainty in Washington also dealt a blow to the US currency. Media reported that Donald Trump replaced his national security advisor Herbert McMaster with a former US ambassador to the UN, John Bolton. The US dollar is highly sensitive to such radical changes. That's all for now. Thank you for watching and stay tuned.